Hey everyone, welcome to this session here on the beginner room at XM Live Education platform. We are also live on YouTube for about 15 minutes. So if you have any question, feel free to ask in the chat about the presentation. It can be about any asset really. If there is no question, then we will just go for the presentation. So first, we will talk about Bitcoin cycles and liquidity dynamics, okay? The idea of the presentation is that we'll try to have an understanding of what could drive the Bitcoin price action over time. What is interesting maybe is if we go to MetaTrader first to have a look at the technical analysis on Bitcoin. Maybe we will try by doing an overview of the previous technical analysis we've done for the past few weeks. So something really important we had is this area here, about 81K for Bitcoin, which we basically said for several weeks now that it would be a strong area of resistance, okay? Several things here coming together as possible resistances. Here you have a fair value gap, okay, which is basically an area where the daily price went through directly, okay? You can see here how it went through directly. So the volume was low, the price didn't find any support in this area, and this area is just void. And price usually like to retest those kind of areas as counter trend rally. Okay, so this area was the first target on the bearish side, let's say. Then we do have here the 200 daily EMA and here 200 daily SMA. Again, on the daily, okay. So the 200 is usually a very important dynamic pivot for Bitcoin, either on the bullish side or on the bearish side. Something to note is that on all the three past bear market for Bitcoin, so in 2022, 2018, and 2014, the 200 always has been resistances during the bear market, okay? And the only time where Bitcoin finally closed above the 200 is when the low is already in and when the bullish trend is starting again. Okay, so here this is a possibility, but until we close above those two moving averages, 200 daily EMA and SMA, I will treat those moving averages as dynamic resistances. Okay, and the thing is, as I said, we are basically having this fair value gap here coming exactly at the same area as where we have the 200 in this zone. Okay. We also have the top of this channel, okay, here, this one, which has seen several touches, okay, and acted as resistance again, even if we have here a small deviation, etc., but still acted as resistance, again, in the same zone. And a third thing which may be of importance is if all of this is a consolidation within the larger trend, which is bearish currently, okay? It would mean that this is a corrective move and not an impulse. So for the people who don't really know Elliott waves, for example, this is impulsive, okay? And this also is impulsive. You have very strong candle, large body, lot of volumes, which break all the supports one after the other and is very fast, okay? And this is corrective, okay, because it doesn't really move that much, only a few percent, but take a lot of time to do it. So this looks corrective. So in my view, this looks corrective as well, okay? I could be wrong, of course, but if it's corrective, then usually it's three waves. It happens in three waves, okay? Either ABC or WXY, it doesn't matter, but it's three waves. And an easy way to get the target of the wave C, the last wave here, is wave A equality with wave C. Okay, so this wave here, okay, this one, equality with this one. Okay, and again, this would give us the same area here at 81 thousand. So this is very interesting, okay? Because for example, here it also was an ABC, wave A here equal wave C here. So we have wave equality also. And currently what's interesting in that in the zone 81K, we have confluence of this fair value gap I've talked about, the 200 daily EMA plus SMA, the top of the channel, and the wave A equal wave C. This is why for several weeks, probably since we were about here, I think, I've talked about this area as a possible area of rejection for Bitcoin. So two things now, either this is a very strong rejection and we continue the bear market. So we find maybe do something like this, target new either those lows or new lows. Okay, this is a possibility. Or we are finding ourselves here for a new higher low. Okay, this is a possibility. But again, for myself, the invalidation of the bearish thesis is break above the 200. So if we break above the 200, which is currently about 81 to 82K, at some point, I would target here, which is the yearly open at 87.5 and even as high as 96, okay? And this would probably accelerate pretty fast once we break above the 200, at least it would be my guess. Okay, so this is just to remind people of the technical analysis we've done for the past few weeks on Bitcoin, and maybe we can come back to the presentation right now. Again, if you are in the chat either on YouTube or on XM Live Education platform on the beginner room, feel free to ask any question about the presentation or about any Bitcoin TA, okay, technical analysis. So Bitcoin, the idea about Bitcoin is that it's really a hybrid asset, okay? Because it's very different from the traditional asset or ETF we have usually. Some people see Bitcoin as a risk asset. Some people see it as a store of value, okay, like a sort of digital gold, and some see it as a leveraged liquidity asset. Okay, several narratives for Bitcoin, and every few years, Bitcoin is really evolving into a new narrative. It started as a mean of payment, okay? In the white paper, Satoshi basically said that it was created to be a mean of payment over the internet. But of course, right now, really, it evolved, okay, to more than that because one, the technology is a bit outdated. So to be a mean of payment, we kind of have better technology to do it right now. But also because of the security and all the people behind it, the miners, etc., which can give and provide Bitcoin security and the store of value narrative. In this case, it would be seen as digital gold, which basically is a hedge against currency debasement on some countries, okay, but also inflation fears, which is very relevant right now because you all know that we do have the Iran War, which started a month and a half ago, 2 months ago, and we are starting to have the numbers like CPI, PPI, etc., coming in where they show that the inflation is very high. Okay, so not unexpected, of course. We expected it since Hormuz is closed and the oil price and the energy prices really are all through the roof. But then we do have strong inflation and it's already seen into the numbers right now. So we probably will have another inflation wave in the next 3, 6, 12 months. Okay, so it's hard to assess the duration of the inflation wave because we already are in the biggest, oil shock and energy crisis ever. So it's hard to know, but the inflation will probably persist for a while, meaning that for now, a lot of people are rushing into assets to fight the inflation. Okay, if you stay in fiat, if you stay in dollars, you eat the inflation every month of a few percent, probably more than what the numbers are saying. So this is not interesting to most investors, meaning that the investors are looking for returns or are looking for investments where to put their money. This is probably why Nasdaq and Mag 7 and AI is like outperforming right now. And this has been one of the narrative for Bitcoin for several years right now. But sometimes Bitcoin is also only seen as a risk asset, which basically means that it would move with tech stock, Nasdaq, etc., and broader markets, and would perform very well when liquidity is abundant, when M2 is very high, and risk appetite is also high, which is kind of current setup. But for now, the people, like most of the people, are basically focusing on AI and AI stock because those are less risky and more volatile to the upside. So this is why people are maybe not that much interested in Bitcoin right now. Then you also have the liquidity proxy narrative, which is just Bitcoin following the flow of global money. Okay, it would expand when we have central banks easing condition. Price of Bitcoin would decrease during tightening cycles. Often before other assets, because Bitcoin is very volatile, but also very fast to move, like way faster than the traditional ETF, which takes a lot of time to accumulate, distribute. Yeah. So I will talk a bit about the concept of market cycles. Okay, first on all asset, you can really use this on all asset, and then I will explain a bit more about Bitcoin really. So a market cycle is basically the tendency of financial markets to move through recurring phases. Okay, phases which come again and again and again, and those phases are usually driven by collective investor psychology. It can be also driven by macroeconomic factors, as I said, like if you have easing or tightening condition, can be very important on all the assets, okay, on the macro, and also asset-specific fundamentals. In the case of Bitcoin, it will be the halving, okay? We will have more, like a deeper explanation of the halving just after, but those are asset-specific fundamentals. So on a market cycle, you do have several phases, which are basically those ones. So it starts with the accumulation, okay? The accumulation comes like after a downtrend or a bear market. The prices are very low or in a bottoming formation, and the sentiment is usually very bad, okay? Negative, apathetic. Most of the people and tourists left the industry at this point. The informed investors, which is kind of the smart money, you know, see a sort of disconnection with current price action and price and what they feel the price should be in the future, in a few months, in a few years, whatever. So they see this disconnection and they start to accumulate in order to sell in the future because they see some long-term value. After the accumulation, you do have the markup, which is the start of the bull market, where you basically have higher highs and higher lows. Okay? Like this, higher highs and higher lows. It's just a sustained upward trend, and this is where most of the money is made. You have like higher highs and higher lows, which confirm the trend. The confidence is growing. More and more people are talking about it. The media, the institution, everyone is entering the market, okay? So usually, this is where you have FOMO at the end, fear of missing out. And the trend is usually very bullish in this phase of the market, okay? Start with hope and optimism, but really end in belief and euphoria. Then you do have the distribution, okay? Which is basically here, distribution, here, or here. So the distribution can have several it can be different visually, okay? But the idea is that when the price are near peak, you have either a volatile range, like here, for example, and here, or a sideways range. The idea is that the people, the smart money who bought way lower are not starting to distribute because they are up multiples and they just want to take their money back, okay? So the smart money is usually distributing into euphoria. Most of the participants are feeling euphoria around this stage. And then after, you do have the markdown, okay, which is basically lower lows